Welcome to Talk Tickers. We dive deep into the latest earnings calls to bring experienced investors the crucial insights they need.
And today we're dissecting the recent Kinder Morgan KMI earnings call.
Yeah, the initial market reaction saw a bit of a dip in the stock, didn't it? So our mission today is really to look beyond those headlines.
Exactly. Understand the underlying drivers and the future outlook for the company.
So let's start with the numbers. What did the first quarter look like?
Okay, so for Q1, Kinder Morgan reported net income of $717 million. Now, that's actually a 4% decrease compared to last year.
Okay, 4% down. And earnings per share?
EPS came in at $0.32, so that's down just a penny, 0 and 1 year over year.
Why the decrease?
Well, it's important to understand why. They attributed it mainly to unfavorable mark-to-market adjustments on their unsettled hedges.
The hedging adjustments. So these are more like accounting things, right? Not core operations.
Precisely. They're accounting adjustments reflecting the current market value of having contracts before they're settled. So temporary market swings hit the reported income right now.
But it doesn't necessarily reflect how the actual pipes and terminals are doing.
Exactly. It doesn't necessarily reflect the underlying performance of the core business.
Okay, so if we put those temporary market adjustments aside, what does that core performance look like?
All right. So on an adjusted basis, net income was actually $766 million. And adjusted EPS was $0.34.
So adjusted net income was up.
Yeah, up 1%.
Yeah.
Adjusted EPS was flat compared to Q1 last year.
And what drove that adjusted growth then?
It came from quite a few areas, actually. Their natural gas terminals, the CO2 business, the Texas interstate gas system performed well.
Okay.
Also capacity sales on their interstate assets, more renewable natural gas production, and their Jones Act tankers. Solid contributions there.
But there must have been some offsets.
There were, yeah. These gains were partially offset by lower gathering and processing volumes, the impact of a planned turnaround at a splitter facility.
And maintenance shutdown.
Right. And also some lower pricing in the RNG, the renewable natural gas market.
Got it. And what about shareholder returns? Any news on the dividend?
Yes. They declared a dividend of 0.2925 per share for the quarter.
Which annualizes to?
That annualizes to $1.17 per share. And that's a 2% increase compared to last year's dividend.
Okay, a 2% bump. So it sounds like, while that headline net income figure might look a bit weak, the adjusted numbers and the dividend hike suggest things are actually pretty stable underneath.
That seems to be the picture, yes.
So what's their expectation for the rest of the year then? How are they feeling?
They actually anticipate exceeding their initial budget for the full year.
Oh, really?
Yeah. And they said that's, at a minimum, driven by the contribution from that recent Outrigger acquisition they made.
Right, the acquisition.
Yeah. So they'd initially budgeted for 4% growth in adjusted EBITDA. Now, with Outrigger included, they expect that to increase to 5%.
Okay, a full percentage point bump from the acquisition.
And their projection for adjusted EPS growth, that remains pretty strong at 10%.
Wow, 10% adjusted EPS growth. That's quite attractive.
It is. And they expect their year-end net debt to adjusted EBITDA ratio, that key leverage metric, to be around 3.8 times.
Which is within their target range, I assume?
Yes, comfortably within their target. A lower number generally means a stronger financial position, so 3.8 is looking pretty solid.
Okay, let's really dig into one of the biggest drivers for KMI natural gas. We heard there was record demand in Q1.
That's right. We saw record natural gas demand. It grew by a significant 6.8 billion cubic feet per day, or BCF per day.
6.8 BCF a day increase. What fueled that?
Two main things, really. A 10% increase in demand from residential and commercial customers, likely weather-related.
Cold weather, yeah.
And a substantial 15% jump in demand related to LNG, liquefied natural gas exports.
Okay, LNG continues to be a huge factor. Looking beyond just Q1, what are the longer-term expectations for gas demand that KMI is focused on?
The long-term outlook still looks pretty robust. Current expectations point to overall demand growth somewhere between 20 to 28 BCF per day between now and 2030.
20 to 28 BCF per day increase by 2030. That's massive.
It is. And the primary driver, no surprise, is expected to be that increased LNG export demand.
How much of that 2028 is LNG?
The estimate is around 16 BCF per day just from LNG. And crucially, this growth is largely expected from facilities that are already under construction or have reached FID.
FID, final investment decision. So these are pretty committed projects.
Exactly. They've secured funding. They're committed to moving forward. So it's not just speculative.
Now, there's been some chatter about potential tariffs, right?
Yeah.
Especially impacting LNG demand from China. What's KMI's take on that?
Yeah, that's definitely a point people are watching. But KMI highlighted something interesting. China hasn't actually imported any U.S. LNG since February of this year.
Oh, really? Since February?
Yes. And despite that, the demand for feed gas, the gas used to make LNG, is setting record highs right now.
So other buyers are stepping up.
That's their assessment. They think any potential drop in demand from China is likely to be offset by more demand from other regions. Think the EU, South Korea, Indonesia.
Driven by energy security concerns, maybe?
Yeah, evolving trade dynamics and definitely a focus on energy security in those areas seem to be the key drivers.
Okay, so it sounds like LNG exports are a huge piece of the puzzle, but where else do they see potential for gas demand growth?
Well, beyond LNG, they expect, let's say, more modest increases elsewhere. Increased exports to Mexico, for one.
Okay.
A rise in demand for power generation. And this is interesting. It's being partly fueled by the needs of AI and data centers.
The data center boom needing power. We hear that a lot.
Exactly. And also just continued growth in residential and commercial use.
And they're seeing this play out in their projects?
Seems so. They mentioned recent projects they're undertaking are actually supported by long-term contracts with utilities in the southeastern U.S.
Underpinning that power generation need in the Southeast.
Precisely.
So how did KMI's actual transport business do in Q1, the volumes moving through their pipes?
Transport volumes in the natural gas unit were up 3% compared to Q1 last year.
Okay, 3% up.
And they even hit new peak day volume records on 4 of their 5 largest pipeline systems.
Wow. Driven by that cold weather.
Yeah, strong demand across all sectors because of the cold snaps in their key markets during the quarter.
What about the other side? Gathering and processing. How are those volumes?
Gathering volumes were actually down 6% compared to Q1 2024.
Down 6%. Why was that?
Primarily due to lower production levels coming out of the Haynesville shale region. Gas prices were lower for a bit.
Right, producers pulled back. But what's the outlook now?
More positive for the rest of the year. They expect gathering volumes to average about 5% above the 2024 full year level.
Okay, bouncing back.
Yeah, and they see continued growth through 2025. That's based on expectations of higher gas prices incentivizing more production.
For storage refill and LNG feed gas.
Exactly, both of those drivers. And they also see significant opportunities for new projects across their gas pipeline network to expand transport and storage capacity.
Okay, let's pivot to that project backlog then. Sounds like they're investing heavily.
They really are. During Q1, they added about $900 million in new projects to the backlog.
$900 million in one quarter.
Mm-hmm. And after you adjust for projects they just placed into service, the total backlog now stands at a pretty hefty $8.8 billion.
$8.8 billion. That's substantial. What's the focus of these new projects?
What's really noteworthy is that over 70% of those new additions, that $900 million, are specifically aimed at serving the growing demand for power generation.
Power generation again. Can you highlight any specific big projects in there?
Yeah, the largest single new one is a $430 million extension of their Elba Express pipeline. They're calling it Bridge.
The Bridge project. Okay.
It's underpinned by a 30-year contract, delivering 325 million cubic feet per day into South Carolina.
Driven by power demand there.
Exactly, increasing power demand in South Carolina. And they even mentioned there's potential to expand it later to over 1 billion cubic feet per day.
Wow. Okay, now with all this building, what about tariffs? Steel tariffs, things like that. How's that impacting the economics?
That's a fair question. KMI doesn't anticipate tariffs having a, let's say, significant detrimental effect on the big projects.
Which one specifically?
They mentioned Mississippi Crossing South for Trident, GCX, and that new bridge project.
Oh.
They estimate the potential impact is only around 1% of total project costs.
Only 1%. How are they managing that?
Through a few strategies, things like pre-ordering equipment, negotiating caps on tariff-related cost increases with suppliers.
Locking things in early.
Right. And for these key projects, they've actually managed to lock in the cost for the majority of the steel pipe they need. Less than 10% of that pipe cost is subject to potential tariff changes.
That's pretty good risk management. Are there other ways they might offset any tariff costs?
Yes, they did mention the potential for expedited permitting.
Getting projects online faster.
Exactly. If they can get permits quicker, bring projects into service earlier, that helps offset potential cost increases. They've even filed with FURC for the bridge project, hoping to speed up the permit timeline by maybe up to 5 months.
5 months would be significant. What about timelines for other big projects? Any updates there?
Yeah, the Evangeline Path Pro expansion is still on track to start up this summer.
Okay, good.
And several projects on their Texas intrastate system are moving along. The South Texas to Houston project is nearing completion, and Webb County and Central Texas expansions are already done and in service.
Sounds like a very busy period for them.
Yeah.
Any changes in how they'll communicate all this to investors? I know some companies do investor days.
Yes, they actually announced change there. Kinder Morgan does not plan to host a regular in-person investor day going forward.
Oh, interesting. No more investor days.
Seems not, but they did commit to continuing to polish an annual company update to keep everyone informed.
Okay, an annual update instead.
And they also mentioned their board has conditionally approved another $400 million in projects, and they're close to signing contracts for those. So still more coming.
Lots happening. Okay, let's shift gears to their products pipeline segment. How did that part of the business do in Q1?
In Q1, refined products volumes were up 2%, and crude and condensate volumes were up 4% compared to last year.
Solid growth there. What about the forecast?
Looking ahead to full year 2025, they're forecasting refined product volumes to be about 2% higher than 2024, although that's basically flat compared to their original budget for this year.
Okay, steady as she goes. Any notable projects completed there?
They did bring a $17 million Florida jet fuel expansion project into service back in March.
Jet fuel for Florida. Where's that going?
Enhancing deliveries to Orlando International Airport, so increased pipeline capacity and also better hurricane resilience for the fuel supply there.
Makes sense. And it's contracted.
Fully contracted for 10 years.
Good deal. Okay, moving on to their terminals business. How's utilization looking for liquid storage? And
Liquids lease capacity remains really high, sitting at 94%.
94%.
Strong, very strong. They noted that refining margins and blending economics have softened a bit, but they're still at levels that support strong rates and high utilization at key hubs like the Houston Ship Channel and New York Harbor.
And what about their Jones Act tanker fleet? Is demand strong there too?
Extremely strong right now. The fleet is fully leased for today.
Wow, fully leased.
Yeah. And 97% leased through 2025. Looking out to 2026, it's 94% leased, and that assumes the likely exercise of contract options.
So locking in good rates long term.
Exactly. They've been able to charter a good chunk of the fleet at higher market rates opportunistically and have extended the average contract duration out to 4 years now.
Nice. Let's talk about their CO2 segment. How did that perform in Q1?
Okay, CO2 segment in Q1 saw slightly lower oil production volumes, down 1% year over year.
Okay.
But NGL natural gas liquids volumes were up 5%, and CO2 volumes themselves were down 7%.
Bit of a mixed bag there. What's the forecast for oil production for the year?
For full year 2025, they're forecasting oil volumes to be 1% below 2024 levels. But interestingly, that's actually 2% above their initial budget for this year.
Okay. And Kinder Morgan is also in renewable natural gas, right? RNG.
Yes, they are. Their Autumn Hills RNG facility actually started operations in March this year.
New facility online.
Yep. That brings KMI's total operational RNG capacity to 6.9 billion cubic feet per year now.
Okay. Let's touch on their recent acquisition activity and just their overall financial health picture.
Sure. So during Q1, they closed that $640 million acquisition of the Pecan gathering and processing system.
A Pecan system, right? How's that performing?
They said it's performing in line with their expectations. Its impact on the Q1 results was pretty minimal, though, just because of the timing of the close and, transaction costs being expensed.
Makes sense. And overall business resilience. How much is protected from commodity prices?
It seems quite resilient. They stated roughly 2/3 of their EBITDA comes from take-or-pay contracts.
Take or pay, so they get paid regardless of volume.
Correct. Another 30% or so is fee-based or hedged. That leaves only about 5% of their earnings directly exposed to commodity price swings.
Only 5% direct exposure. That's pretty low. What about debt levels? What's the net debt and leverage ratio?
At the end of Q1, net debt was $32.8 billion.
Okay.
And the net debt to adjusted EBITDA ratio was 4.1 times. That's within their target range of 3.5 to 4.5 times.
Still within the target.
Yes. And they expect that ratio to improve as the EBITDA from the Outrigger acquisition gets fully incorporated.
Right, as the earnings from that flow through. Did debt go up in the quarter?
It did. Net debt increased by just over $1 billion since the start of the year.
Why the increase?
Primarily due to a few things. Working capital usage, paying dividends, capital spending on projects, the Outrigger acquisition cost itself, and also posting collateral for some natural gas hedges.
Okay, standard outflows, offset by cash flow from ops.
Partially offset by cash flow from operations, yes.
Got it. There was also news about management changes, right? Succession planning.
Yes, some key changes announced. Paul Martin will be retiring from his current role in January 2026.
Okay, retiring soon.
He'll transition to an advisory role then. Dak Sanders has been named as his successor as president.
Dak Sanders taking over as president.
Right. And that transition of responsibilities starts this August. Concurrent with that, Mike Gweet will become president of Products Pipelines.
Okay, new leadership roles shuffling around.
Mm-hmm.
In terms of the broader market, what's KMI's thinking on M&A right now? Are they looking to buy or sell?
Well, they said they remain open to looking at potential acquisitions if they strategically fit, but their main focus right now is really on funding their growth projects using their existing cash flow and balance sheet capacity. They're not looking to sell assets to fund growth.
Okay, focus on organic growth and using internal resources.
Pretty much. They did note that, turbulent market times could create opportunities to buy distressed assets maybe down the road, but their initial reaction tends to be cautious, thorough due diligence first.
Makes sense. They also talked about specific regions. I think Arizona came up. What's the plan there?
Yeah, they see a growing need for gas infrastructure in the desert Southwest, including Arizona, so KMI is actively pursuing opportunities there.
Both expanding existing stuff and building new.
Exactly. Both brownfield expansions and greenfield development. They're talking to potential customers now.
What's driving the need in Arizona?
Several things, potentially. More data center development, growing power needs for Arizona utilities just due to population growth. Potential power plant demand down in Mexico that could be served through Arizona, and maybe even LNG exports off the West Coast eventually.
Lots of potential drivers. Is their current pipeline full there?
They mentioned their existing El Paso natural gas pipeline, the EPNG system, is currently full. So any big expansion would likely mean twinning the pipe, building another one alongside it.
Or smaller expansions.
Or smaller, more capital-efficient brownfield projects are also being looked at, yes.
Okay. And what about that Double H conversion project? Converting a pipe to NGLs.
Yeah, that conversion to natural gas liquids is progressing. KMI is looking strategically at how to capture more value in that NGL chain.
How so?
The goal is to be able to move NGLs to both key market hubs, Conway in Kansas and Mont Belvieu down in Texas.
Giving them options.
Exactly. They're actively trying to sign up incremental contracts now, but they acknowledge it's a competitive market for NGL transport.
Okay. And lastly, any updates on the Haynesville shale production trends and their Texas intrastate system?
Right. So after that period of lower gas prices in 2024, KMI is seeing their producer customers in the Haynesville starting to ramp up activity again. They might even add more rigs than previously expected.
Oh, interesting. So more volumes coming later this year, potentially.
Could be, which would obviously benefit KMI's gathering volumes. They also mentioned that the hydraulic capacity, the fracking capacity in the Haynesville is getting close to previous peaks.
So they might need more infrastructure.
Discussions are happening about potential of further capital-efficient expansions to unlock more capacity there.
And the Texas intrastate system. Any highlights?
Yeah, they pointed to the Houston Power Gen project as an example of the kind of capital-efficient opportunities they're chasing.
Okay.
And that Central Texas pipeline, they recently finished the 30-inch line off PHP towards Austin, is already seeing activity related to power and data centers in that area.
So lots of potential on their existing Texas footprint.
They think so, yeah. Numerous possibilities for expansions there. They also sounded pretty positive about permitting in general.
Oh, yeah. What did they say?
Mentioned positive talks with the administration and groups like the Energy Dominance Council about accelerating project timelines.
Like that FERC filing for the bridge project?
Exactly. And positive interactions with the Army Corps, parks, fish and wildlife agencies, too. Seems like a shared goal of getting needed projects moving faster. They also see deregulation efforts, like the expected end of the Good Neighbor rule, as generally positive for the industry.
Okay, this has been a really comprehensive dive into Kinder Morgan's latest call. Lots to unpack there.
Definitely.
So now it's time for a signature "This is not financial advice" segment, where we explore some maybe unconventional but perhaps plausible trade ideas sparked by this deep dive.
All right, let's get speculative. Consider this. The market is, absolutely captivated by AI growth and the need for data centers.
Right. Data center REITs have been hot.
Exactly. Huge enthusiasm reflected in pretty lofty valuations for those REITs. But let's think about a potential bottleneck.
Energy.
The sheer amount of energy these places consume, permitting and building new large-scale power generation, new transmission. It's complex. It takes time.
A lot of time.
So here's the outrageous but plausible idea. Think about maybe a long position in Kinder Morgan paired with a short position in a major data center REIT.
Okay, long KMI, short data center REIT. What's the thesis?
The thesis is that this exponential AI and data center growth will disproportionately benefit the natural gas infrastructure needed to power them reliably. KMI, with its vast network, is sitting right there to capitalize on surging gas demand.
Well, the REITs might face headwinds.
Potentially. Maybe increasing energy costs, maybe slower buildouts than expected because of energy constraints
Right.
that could pressure their growth and valuations. It's the energy bottleneck idea.
Interesting. The infrastructure potentially benefiting more directly than the end user facilities themselves in the near term.
Could be. Now, obviously, let's be super clear. This is highly speculative and is not financial advice.
Definitely not financial advice, just an idea to mull over.
Exactly. It's a contrarian perspective. You absolutely must do your own thorough research and due diligence before ever making any investment decision.
A very provocative thought to end on. So as you reflect on this deep dive into KMI's earnings call, what are your key takeaways? What signals are you watching now in the energy sector?
Lots to think about for sure.
We really encourage you, the listener, to continue the conversation, share your own insights. Thank you for joining us on Talk Tickers.
And until our next earnings dispatch, please remember, nothing discussed today constitutes financial advice.